Good day, T with Travis. Wow, what a magical Monday it is. As many of you have heard, I'm sure, if you've been watching the market at all or turned on the news at all this morning, the government stepped in this weekend and they took over the responsibility of Fannie Mae and Freddie Mac, meaning they're the conservator of running those two huge multi-billion-dollar organizations that were kind of pseudo-government agencies to begin with, but they truly are going to be running them, replacing the CEOs or the heads of those actual companies. So it's interesting to say the least. Mortgage-backed securities, they've bounced around a little bit. They've been everything up to 112 basis points down to 88. We're right at 100 right now. What 100 means, 100 basis points simply is 1% of the loan amount is the fee that you will have better today than if you had done this on Friday. So if you were to buy a $400,000 or get a $400,000 mortgage today to get the same rate you would have had on Friday, you're going to pay $4,000 less. So this is a huge number. The last time we've seen a jump like this was back in March. Before Martin Luther King holiday, and actually that was in January, but in March there was a big tick up. But so this is good news. The rates are almost the best they've been since March, and with this there's a lot, not just in the rate, but this is really great news for the economy, because what this is going to do is allow the mortgage-backed securities that have been kind of frozen, all these investors from either the world market or even here in the United States, like retirement systems buy a lot of mortgage-backed securities and so on. Well, everybody's scared to buy mortgage-backed securities right now. So there's been kind of a freeze, even though Fannie Mae and Freddie Mac have been funding these deals and making the guidelines to make these work. Investors still aren't buying them. So just because Fannie Mae and Freddie Mac can offer a loan product, it doesn't mean they can sell it. So the problem has been they're able to offer these loans to people like you and I, but they're not able to sell them. So that creates a huge liquidity crunch. And so what's happened is the government stepped in. They said they're going to back it by $200 billion to be able to make more liquidity in the market and have more loans available. Not so much guideline softening. We're still going to have to see full doc. We're not going to go back to the craziness we saw a year ago where you could do a 100% stated loan or something. But it's definitely going to cause liquidity. So it's going to drive rates down. It's going to cause more affordable financing for people to go out and buy these homes that are sitting there on the market. So this is huge news. That's why we saw this. We wouldn't have seen a 100-point jump in one day had this not be huge news for the economy. The Dow was even up 350 points to open. They're down, they've tapered off, they've lost 200, but they're still in the black by 150. So to see bonds react this way, to see stocks react this way, this is nothing but good news for our housing market. What a magical Monday, as I say, and what a way to wake up to that news. I saw it hit the news yesterday, but the markets were obviously not open yet, so I had no idea what the impact was going to be. I thought, from everything I've read, that it was going to be favorable for mortgage rates, but I had no idea it was going to be this good. So great news for us. We're way above support on a 200-day moving average. We're kind of in this unsafe zone where mortgage-backed securities are overbought, meaning investors have purchased so many of them that they're almost in a position to sell off. So there might be a tick down here in the next couple of days, but for right now, what a great opportunity to buy, not only with the mortgage rates being good, probably more liquidity and what kind of loans we can do, and then the price is just awesome. So go buy a home. I look forward to serving you. Have a great week and be blessed.